Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Monday, March 21st, 6:45 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at equities, pretty much everything is just ticking red, not too bad, like 0.2, something like that. Oil's up 4%, copper's down 1.2%. Everything else is minimal. On the macro front, really not a lot today. We've got Raphael Bostic from the FOMC talking. And if you go to the website, you'll see that we've got a number of Fed speakers this week. Pretty typical after an FOMC announcement that they can, embellish or polish or get us ready for the next rate hike or whatever they're going to do. So there'll be a lot of speakers this week. Not a lot on the earnings front either. We do have that Pinduoduo Chinese name before the bell, and then we've got Nike after the bell. Before we dive into the charts, even though I've got a lot of charts to show you, I think it's a worthwhile moment to spend a little extra time on our inspirational trading psychology portion of the blog site. I've got two quotes to think about. Number one, abandon knowledge and your worries are over. And the second one, logic is an invention by man and may be ignored by the universe. And of course, you can replace the word universe with markets, because logic really has no place in the markets. If it did, all your PhD economists and all your very bright people would be making all the money. And of course, that's not the case. It's usually the people that can either are not typically book smart, or those that are book smart have figured out that they can't rely on that in markets to make money. Now, last week, Friday, Thursday, you should have made, if you're sitting in front of your desk, you should have made a lot of money. And if you didn't, it bears real close examination of why you didn't. Re-listen to the video. Listen, take note of the levels. Then go back and try to get into your mind about what you were thinking. And I've boiled it down to a couple things, probably had to do with it. And I've talked about both of these recently and often. Number one is you didn't approach markets with a beginner's mind. And you can think of the beginner's mind as someone that's totally open to the inputs that the market is giving you. For instance, say you were handed the Fed statement 2 hours before the 2 o'clock. Say you got it at noon on Wednesday, and you see, the Fed's going to be hiking. You are given a preview of Powell's statements that are all hawkish, and we're going to let the balance sheet run off, and we're going to tackle inflation. We're going to crush it. All this kind of stuff. And there's a war going on, and that inflation is raging. So you get that all in advance, and all of a sudden you think you know something. Wow, the market's going to trade down, right? All these bad stuff. The Fed doesn't have our back anymore, and blah, 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 blah. And it goes up. So any kind of notion that knowledge was going to be helpful was misplaced, right? So approach markets with a beginner's mind and try to shield yourself from, various inputs if that gets to you and causes you to get knocked off of center, knocked off of the place where you need to really be successful, stop doing that. Think of those things, abandon knowledge and your worries are over, and logic has no place in the markets. And then lastly, leaf on a stream. That's what you want to be. That's the picture I want you to have when you're trading. What would a leaf do in this situation? Price is rising. You want to be that leaf on that stream of price. You don't want to be the guy trying to shoot against it. You don't want to be the guy that, is closing out. Oh, I think it's run too far. There's no way. I'm going to close out and, take profits kind of thing. Or, this is just a kickback rally. It's going to reverse. So I'm going to get out of my position and I'm going to get short because I think it's going to reverse here soon. Those are all flawed thought patterns that are destructive to your success. What you do is on all the levels, okay, price jumped over this level. Where's the next target? Do I want to roll up my position, i.e. raise my stops or change my strikes? And your first thought is stay long. Price is achieving technical objectives. Stay long. But how do you want to stay long? Do you want to sit in the position that you have, or do you want to roll up, take some of those profits, harvest them, so if the market reverses, it doesn't take away all your hard work and your rewards, but at the same time, still be long to participate in the markets and stay in the direction of the flow of the stream, which is higher. So keep that mental image in your mind. Write a Post-it note. Carve it in your desk. If there's one thing that will really, really help you in your trading is I want to be a leaf on a stream. And a leaf does not care if it goes up or down. It's just happy to be on that stream, letting it take it wherever it wants to go. I think it's a perfect way to think about markets and your trading. And then lastly, before we dive into the charts, if you made nice coin last week, or you've appreciated the analysis, jump over in the show notes. There's a place where you can make a donation to the channel. Show your support. Help support my work. Help support me. Leave a comment about what you want to see in these videos, things that you want me to cover, things that you're struggling with, and I will certainly address it in an upcoming video. It would be my pleasure. So, and I deeply appreciate any kind of, donation that you want to make to the channel if you've done well. So let's figure out where we're at here. I'm going to move rather quickly. Got a ton of stuff to show you. And again, make sure you're running your player fast or you're going to be here all day. McClellan oscillators jumped up into overbought territory. That didn't take long. It took 3 days. We went from minus 30 to plus 68, plus 70. Here we are on the NASDAQ oscillator, up to 70. You can see all the different places right along that line where price usually reverses. If you're new to the channel, you don't fight NIMO. You don't fight NAMO. Why? That's the rubber band is stretched to the upside, and that we should be thinking about the potential for a reversal. You can see, though, that this can go higher. I think there's more left in the tank. But that being said, you've got to protect whatever positions that you have on at this point, knowing that the rubber band is stretched to the upside. I'd like to see you stay long, but with tight stops. I'm going to show you a bunch of stuff in the charts here that'll kind of give you an idea of what to look for on a reversal. So the yellow flag is flying on the oscillators. This is a chart that I've developed. It's out there. It's not anything original to me, but since it's in my chart deck, I wanted to show it to you. Rising indicators on this set note a defensive market, and we've made notes in the past how utilities, healthcare, staples have been outperforming, noted by the rising trend. And what we want to see in a rising market environment is we want the offensive sectors to do well, not the hiding places like staples and utilities. So what do we see? If rising indicators are defensive, then falling indicators denote offensive market behavior. You can see utilities have come down a lot, approaching trend. That's good. Healthcare has some defensive but also some offensive characteristics. It's staying flat. We're long healthcare. I'm fine in that position. But look, staples being overtaken by consumer discretionary. That's good. That's an offensive move. You can see that the ratio is breaking below trend. Same thing in staples versus SPY. Break below trend. And also make note that we've been watching the relative performance of SPY to QQQ. And historically speaking, when SPY outperforms the Qs, it's bad. It's not. It denotes a weak market. You want to see technology, the Qs, outperform. And we're starting to see price break trend to the downside. That means that tech is beginning to outperform. Now, 3 days. That doesn't mean, an all-in moment. All it means is we've got the potential for an emerging trend change, for these to continue down and for the market to continue to show offensive characters. VIX, another nice move Friday. We dropped from 26 to 24. Just watch the trend. There's nothing particular back in the charts to say, expect a bounce here. If you see VIX trending higher, that's a yellow flag. So keep VIX on your dashboard and watch the trend. SPY daily. We broke out of the falling wedge. We recaptured the 200. We recaptured the 50. Anytime you recapture and moving average from below, that's bullish. We took out this value area from 430 to 440. You see the high volume over price bars, and you can see that above 440, the resistance profile is less intense. There's fewer trades have happened up here, which makes it easier for price to travel. So today on SPY, I think 445 is a great pivot for you. As long as price can stay above, then that's going to remain positive and somewhat cautionary if price breaks below. Now, let's see here. I want to show you something. 2 hour. Had the double bottom. We got the measured move target. Now we're up here at 445. Notice that we do on this time frame have some larger bars there. So really a break above 445 targets 450. That's going to be your first target, and your second target is going to be 455. What I've done on a 30-minute chart is give you a trend line for visual reference on this steep move. We've had 3 consecutive days of really uncorrected activity, and it doesn't mean that we just can't, open and go higher, but the probability of a check back is growing. This is just a very steep trend line to maintain. If we start rolling down and lose 443 and then 442, I mean, you can pretty much count on coming back to 440 just as a somewhat of a check back move. One thing you could do, I haven't done it, but put on your Fibonacci retracements from low to wherever the high prints, where you start seeing some red candles, and then where those Fibonacci retracement levels fall, compare those to in conjunction with your technical support levels, and then the 38% might come in at 440. That'll be a first place to look for price to stabilize on any kind of a pullback. So really steep angle of attack. Watch for a corrective pullback here. Qs. Downtrend, kickback rally. We recovered the 50 EMA into the close on Friday. We've got a little gap above, and we've got the 200 EMA above as well. And notice the largest volume over price bar on this chart comes in at 360. So, and you've got the fib retracements here, and this is a good example of what I just talked about. You notice that the 50% fib retracement comes in at 361, and we've got an important line on the chart technically at 360. So you've got the 200 coming in at 357.50. So you've got a $4 or $5 band of resistance between the 200 and the 50% retracement area. That will be important. If the bulls are to power through, then all that stuff would become support, and then that would obviously be bullish. But I would not be surprised with some kind of a hesitation or even a rejection at around 360 in that area if this is just a bear market rally. So if we can break above that, then we can go up to like 366 and challenge a fill of this gap. 2-hour chart, you just get some fine tuning. We've got a gap right above, and then here's that big 360 level that we just spoke of, and then the upside targets from there. I would think on a little, just looking at this chart, on any kind of a little check back, I would be homing in on 342. Why? Because you've got a high volume over price bar on the chart, and you've also got a prior trading range right here. It would be nothing for this to come back to 342 and then find some support in that type of area. But But as always, just go level to level. If we come in towards 342 and it fails, then you start looking at the levels below to where price might find support. Here on the 30-minute chart, I've drawn that steep uptrend line off of the Wednesday low. Was that Wednesday? No, that must have been last week. This was Wednesday here with the move down and then the move back up. But anyways, you've got a visual reference there on the 30-minute chart with that trend line, and you can do that, on your own charts, whether you're trading the 15 or the 5-minute or whatever. Draw yourself a trend line that encapsulates all this trading, and then you'll have a good line to shoot against on the long side going forward. IWM trading range broke above the 50, that's bullish. Broke above the daily downtrend line, that's bullish. Broke above the consolidation range, that's bullish. Not much really stopping this from going up for at least a back touch of this big support area above that starts at 210. I would take note of where the 200 comes in at 211.66, and then I would take note of this where this gap is. And one thing I want to put into your narrative is watch out. We want to guard against being caught up in a bull trap. What would a bull trap look like? 210 should be massive resistance that goes back a year. But say price breaks through that 210, whether it's today or later this week, that's going to trigger a lot of technical people like me. You're supposed to buy that. Here, you're supposed to buy a breakout above the trading range and resistance. That's fine. You got $3 of travel north before you hit this 210 wall. And so you get a break above back into this old trading range. A lot of technical traders will want to buy that. Just when you recapture a big trading range from below, especially one that's so significant at 210, you're supposed to buy that. So right there, say we get long, then we've got the 200, and then we've got this gap fill. You could get above the 200. That's going to be another technical signal for technical traders. You're supposed to buy the recapture of the 200. So more people buy. They come in, fill that gap, and then fall back out of the range. And then that would trap a ton of people that bought the break into the range, that bought the 200, that bought the gap fill, and then they go the other way. Because remember, the SPY and the Qs on the oscillator are overbought. So if this jumps in here and everybody piles in, and then they go the other way, that's going to be fuel to the downside. And here we have those levels marked in a little more tightly. Definitely on the upswing here. I've taken out the gaps that were filled on Friday. I think you can be long against 207, depending on how we open today. If we got above 208, I would either buy that if I wasn't in it, or if I carried over a position from last week, I would definitely roll up my strikes to 208 here and see if you get a $2 move up to 210. So before we go through the Fatman stuff, I want to welcome any new visitors to the channel. I really appreciate your time. I spend a lot of effort trying to help the team with objective levels and commentary on how to trade the markets. If that appeals to you, please hit the subscribe button and the alarm bell. That way you'll get notified of the YouTube content. Also, jump over in the show notes. You'll find a link to the blog site where, with a simple drop of your email, you'll get all my content morning, noon, or night sent right to your email box. And you'll also get an invite to our trading room where you'll meet a lot of super nice guys and girls that are trying to improve their trading, providing a lot of camaraderie with one another. When we have bad days, we lift each other up, and when we have good days, we congratulate one another, and that's the way it should be. If that appeals to you, please sign up, and we'd love to have you. And of course, longtime listeners, I really appreciate you being here. I hope you're really getting some good information out of the content. Facebook, Friday, we talked about 212 as a swing entry for daily time frame on Facebook. I think you should be looking up towards the 38% retracement level up here at 240, which also happens to coincide with the declining 50-day moving average. Go up for a touch of that, and then there'll certainly be a decision point. On the 30-minute chart, you've just got intermediate levels here. You've got a large volume over price bar coming in at 227. That could potentially slow things down. And if you got to move up there and you were able to hold this trend line the whole way, I would definitely be rolling up strikes at that point if you got another $10 move out of it today. Apple, bear trap, fake breakdown, re-enter from below. What was once resistance is now support. Recaptured all the moving averages except the 50, which comes in right at this downtrend line. If I were trading and were motivated to buy Apple, I would buy the breakout above the 50 and this downtrend line, and then I'd be looking for 168, 172 up here. If we go down to the 60-minute chart, you'll recall that last Thursday, and actually Friday morning, I told you that I had a long position. I was looking for a gap fill, and I got that. But now I'll tell you my mistake, just as we talked about it at the top of the program. So I was thinking to myself, I'll be happy with the gap fill, right? I'll be happy with the gap fill because at the point of the opening, I was down with only, the session to go with options that expired on, Friday at 4 p.m. So I was watching the clock, and we got to move right up to 163 by, I think it was 1 o'clock, something like that. And I took profits there. And I was thinking to myself, well, 1, I got lucky that I got the gap fill. 2, met the technical target. And 3, expiration was going to be in 3 or 4 hours. And then, of course, price kept going. And then, I went from congratulating myself to thinking that was really dumb. And when hindsight is always 20/20, price didn't really give me any reason to have to get out. That leaf on a stream analogy, there wasn't any price signal that said we're going down. All it did was consolidate just below 163 for about 90 minutes, and then it broke out. And then, so that cost me quite a number of hundreds of dollars just out of not being patient. So happy that I got the gap fill, happy that I made money, disappointed that I didn't have the patience to stay in it just a little while longer. Tesla, making good progress, has recaptured all the moving averages, including the 50. I think your pivot is really, really clear right here. It's 900. As long as you can hold 900, I think you can look up towards 935 to 950, where you've got a little band of resistance there. If you can clear 950, I think you can get to 1,000 as your next target. Microsoft worked great as well. We talked about on Friday, stay long against 294. That was good for $6. We were talking about 301 as being the target. Just about got there. I think the big level now is 305. That was a big breakout level back here. You can see resistance, broke out, but then support, came back here and really wrestled with 305 until it finally gave way. Made one last run, failed at the trend line, and now is back up there again. If you're long from Friday, I would stay long. Let's look at the 60-minute chart real quick. Here's that 301 level. If you were to break out above 301, I would roll everything that you got up to that level and then look for 305 as your first big resistance level. Amazon doing really good, really well. Double bottom, projected move way up to the prior highs. We said last week that that's just a projection. It's not a promise. And so price broke above this 31.75 level and stopped on a dime right here at the 200, which comes in at 32.27. Right here. Very simply put, I think you should use the 200 EMA as your pivot, even for people that want to get long on the daily time frame. If you're not in yet, you can shoot against this 32.27, the 200. Maybe set your stop back at 3,200 or 31.75-ish kind of level right in here, and see if you get a push, or if you get that first rejection off of the 200 and you get a good pullback. Look for a level that you can shoot against on the long side, where you can set an objective stop just below, and then you would have some power for the next leg higher. So, and you can put your fib retracements on this leg of the up move, just like we talked about from before. Google, What was once resistance is now support. Just like Amazon recaptured all the moving averages, I think you can use 2,700 as your pivot, and I think that would work great with your first target up here at 2,750, which coincides with the 50% halfback. That 2,750 is going to be a really important level. Netflix coming in to a very high volume over price bar. I think this is going to be the big zone right here between 380 and 400. If it can get above there, then I would think there's going to be enough power to come back to back test this 450. I think if it's going to fail, it's going to be like right in this area here. Semiconductors, right to the key spot, 270. I think you can be long against 270. Look for your first target here at the 50% halfback level at 273.87, call it 274. But then your next target above is 280. Here it is on the 60-minute chart. Here's your 270 in bold. You get a breakout there. Notice that you've got a $3 or $4 gap right here from about 276 to 280. Be aware of that if we get up there today. Quickly, we had some bracket trades that worked great. We got the full gap fill last week. Right here, if you rolled your position on Friday and you're up here at the money, or if you got 95s, I would just stick with that. If you're not in, I would do one of two things. If you get a pullback in the 92.50, I think you can buy that with a tight stop. Or if it breaks out above 97.5, you're in a price void here, and I think you can get another $10 out of it up to 107. Coop Software, same kind of analysis. I think at 93 here, you move into a price void. I think you can reach 106, 105, right in that area. Not a lot of trading resistance here. I think you can make that move, and you've got a line here to shoot against. Really fast, running out of time. ARC FinTech broke out on the daily chart. I would be looking for resistance levels at the 50 and then up at these fib retracement levels. ARC Genomics still under the downtrend line. I would be setting your alarm like right at the 50 at, call it 48.50. If you got a breakout there and things look strong, you can buy that long, or you can just alarm 51 and then shoot for this void in the charts. ARC K, the Tesla proxy, you've got a level here at 65. If it breaks above, you're going to run into the 50 and then the downtrend line. I don't think the risk reward seems all that compelling, but certainly from a technical standpoint, you can buy a breakout above 65, and then if you get a breakout above 75, then the thing is really going to be rolling. ARC W just emerging from a downtrend breakout. I think you can be long against 84 on ARC W. This chart kind of excited me over the weekend. I've not done a ton of trading in crypto. Of course, this is the grayscale Bitcoin trust. I'll call it an ETF. I'm not as sure what exactly the structure is, but I like this setup. Big uptrend line, clearly defined support level that was tested back in 2021. We've made a lot of tests of 25 right here at the beginning of the year that have all held. If you can give yourself $3 of heat, $4 of heat to the downside, my technical target would be back up at the top of the box at 53. So even if you, called it $4 of heat from 30, you're looking for $32 move. So that's an 8-to-1 risk reward ratio, 32 for a potential $4 stop out. I think it's pretty compelling. If you don't like it and we got a down day, towards 25, you could buy it there and then your stop loss would be even closer, or you could take a half a position, and if you got a pullback, take a full position. But I really like that structure. I'm not going to go through the rest of the charts that I have for you. I'm just going to give you tickers. Brothers Coffee, BROS, looking for a breakout. Allstate, looking for a breakout above 135. Deere, DE, has broken out on the weekly. I like that long. And if you want something off the beaten path, look up the Canada ETF, EWC, breaking out on the weekly chart. I like that one long as well. So let's wrap it up quickly. Stay really flexible in your thinking. Don't try to outthink the market. Just go level by level like a leaf on a stream. I think your trading will improve tremendously. Hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.